People who are serious about software should make their own hardware. This was back in 2007, back when Steve Jobs unveiled the iPhone. And what happened yesterday? Well, yesterday it was finally confirmed that after years and years of rumors, speculations whether or not Apple will be the one that will compete with the likes of Tesla when it comes to autonomous vehicles, when it comes to electric vehicles, etc., etc. Well, finally, the news dropped and it says Apple ends quest to build its own electric vehicle. Basically, Apple admits defeat. Apple here admits that it is not worth their time, it is not worth their investment either to start making cars. Making iPhones, iPads, AirPods, etc., is one thing. Manufacturing EVs at a large scale is a completely other thing. And remember, Apple outsources its manufacturing to companies like Foxconn. It does not do this in-house like Tesla. They say here the secret group inside the iPhone giant, known internally as Project Titan, has been informed that Apple would be shutting down its effort in building a car while the company ramps up investments in the area of generative artificial intelligence, a person familiar with the situation said. Some of the employees inside the group will be shifting to Apple's AI group. Of course, we know Apple's ecosystem is pretty strong, probably the strongest ecosystem out there. Now, Apple is not new when it comes to cars, right? Inside most of the cars, actually, it says here CarPlay now comes installed in more than 90% of model year 2023 vehicles sold in the United States. So Apple already has a foot in the door when it comes to computer on wheels, thanks to CarPlay. Maybe in the future they can expand that. Maybe inside now with generative AI section of the company getting a bit more attention, maybe they're working on something new. Could very well be. They could partner up with auto manufacturers, license deals, etc. That could happen in the future. The funny thing is that when this was announced, suddenly the stock jumped a little bit because some analysts were pretty happy to hear that. Apple canceling this project is a sigh of relief for us. This is Dan Morgan, a senior portfolio manager at Apple shareholder Synovus Trust. When you looked at Apple's future initiatives, the car project was always the most far-fetched for Apple. This just isn't in their wheelhouse. That's no pun intended, I guess. And of course, with the rise of AI applications, generative AI chatbots, etc., everybody is still waiting for Apple to do their own thing. There have been some rumors with regards to the next iPhone could be marketed as the AI iPhone, AI applications on your phone. Let's see. Also, there's the other side of things. AR, VR, mixed reality, right, with the Vision Pro, that still needs to get developed a lot more, become much cheaper so it appeals to a larger and broader audience. And if we go back to what Tim Cook said not so long ago, we've got some things that we are incredibly excited about that we'll be talking about later this year. Maybe they'll come out with a Siri that can actually understand your question and answer correctly. Only one can hope. Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, currently, Apple has a market cap of $2.82 trillion, so not the largest company on the planet anymore, has a forward PE of 27.4 times, and as you can see yesterday, when the announcement was made, you can see here the stock jump a little bit from $180 to $183 or so, closing the day at $182.63. Now, despite Apple having a dividend yield of just 0.53%, the shareholder yield is much higher than that, sits at 3.66%. Why is that? Well, that's because of all the buybacks the company has been doing in the last couple of years. But even purely looking at the dividend yield, the annualized growth in the last 10 years is 8.37%. In the last 3 years, 5.57%. And this is basically what you get. This is in a 10-year period. You can see your shares outstanding have come down significantly. Free cash flow per share has gone up significantly as well. And as this company ramps up its cash pile, I do expect them to continue to increase the dividend payouts and maybe even increase the buybacks as well. And this brings me to the next point. Apple, tremendous business, right? There's no doubt about that. Tremendous business, cash generating machine. But that's the problem, or sort of a problem. Because they generate so much cash, they have put themselves in a very, very comfortable situation where innovation-wise, they aren't really forced to come out with something new each and every year or each and every 2 years. Yes, more recently, now with the Vision Pro, you might say, finally, they are trying out something new. But in my opinion, if Steve Jobs was still here, the Vision Pro would have never been released the way it did. Super expensive, a cable hanging from the headset, and a battery in your pocket. It just doesn't make any sense. This is not the Apple way. Being extremely comfortable with your cash generating business usually tends to lead to you not innovating as much or not willing to take that much risk, as we've seen with the likes of Alphabet, for example. Now, more recently, of course, no growth was also an issue for this company, right? If we look at their latest earnings report, which we will in just a second, basically didn't grow that much year over year, about 2%. And if we look at their key market, which is also China, that decreased year over year. If we look at iPad, Mac, wearables, all of those decreased year over year in the latest quarter. But there is also something that is more positive, which is the services side of things. Now, currently, last quarter, they are pleased to announce that their installed base of active devices has now surpassed 2.2 billion, reaching an all-time high across all products and geographic segments, which also means that every time they have a software update, that should be in the headlines of a 2.2 billion recall. This is obviously a joke. Now, looking at their latest numbers here, fiscal year 2024 Q1, we can see that total net sales increased approximately 2% or so, but what increased more was earnings per share that was up 16% year over year, so definitely becoming more and more profitable. Now, the, let's say, orange flags here was the net sales by reported segment. So Greater China decreased from 23.9 billion to 20.81 billion. Americas grew a tiny bit. Europe grew and took basically the hit from China, turned that into a positive. Japan increased a little bit, and then rest of Asia Pacific, the same thing. Then if we look at the net sales by category, iPhone grew year over year a bit. Mac didn't grow that much or at all. iPad decreased, wearables decreased as well. But services reached a new all-time high. Services is the one that increased the most, and services, of course, is the one with the higher margins. And I think this is also where a lot of growth in the future will come from. Of course, we could get a new refresh cycle with, let's say, new devices that will be marketed as AI devices. And so you get a new and better upgrade cycle, could very well be. But in the end, you've got 2.2 billion devices, 2.2 billion devices inside your ecosystem, 2.2 billion devices that you can start upselling by selling services, cloud storage, maybe AI capabilities, AI generation applications, etc., etc. Services is where I expect the growth to come from. And of course, in the future, if they come out with more affordable VR glasses, AR glasses, you name it, I think we're going to see a lot of growth from that segment as well. And so, looking at the stock right now, we can see that in the last couple of days, the stock has been flirting with the 200-day moving average. Previously, we've seen the stock rebound on that, which is a pretty positive sign. And the same thing happened again yesterday, of course, thanks to that announcement of them basically admitting defeat with regards to building the Apple car. So that's pretty positive. The 50-day moving one sits at $186 and the 21 at $185. If we look at the weekly, here the representation is a bit more clear. We can see that every time besides here October of 2023, where it dipped 2 weeks in a row under the 200-day moving average, usually we see a rebound on that 200-day moving average as a positive sign. Maybe the same will happen here. Again, RSI pretty neutral. So overall, to conclude, I do think this is positive news for Apple shareholders and Apple moving forward, finally putting that Apple Car chapter behind them and focusing on better things. AI devices, AI applications, AR, VR ecosystem, etc., etc. I think that is way more in their wheelhouse than building now an Apple car. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.